Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 26th of June 2021, and we're publishing our regular weekly gold and silver price update for the week ending the 25th of June. This past week we've provided daily morning updates and would recommend that you listen to at least the last one or two in order to supplement this weekly update. We've placed links to these below. Let's now take a look at what's been happening this past week and what conclusions we can draw to predict what's likely to happen this next week. Let's take that look. Gold rose $17 last week from $1,765 to $1,782, having hit a high of $1,795 and a low of $1,765, a rise of 1%. In sterling terms, gold finished the week at £1,283, that's up £4, and in euros it closed at €1,492, that's up €4. Silver rose 33 cents, from $25.81 to $26.14, closing above that important $26 level, having hit a high of $26.31 and a low of $25.58, a rise of 1.3%, so marginally better than gold. In sterling terms, silver closed at £18.22, that's up 10 pence, and in euros it closed at 21.90 euros, just that slightly shy of 22 euros, that's up 0.12 euros. Gold to silver ratio of course fell as a result, but very marginally, from 68.4 to 1 to 68.2 to 1. Now Bitcoin is down some $4,669 from our report of last week and currently stands, though the price is fluctuating widely, at $32,539. It's been as high as $36,711 and as low as $28,852. And quite a few people are predicting one of two events, either a significant fall down to $27,000 and possibly even $24,000 below that, or now a splurge upwards towards $41,000. Let's wait and see what happens on that one. Equity markets have been in very positive territory, with the Dow Jones closing on Friday at 34,433. That's up 237 points on the day, but up a considerable 1,143 points on the week. The S&P 500 closed at 4,280, up 14 points on the day, but up 114 points on the week. And the Nasdaq Composite closed at 14,360, down 9 points on the day, but up a healthy 330 points on the week. So those still invested in equities, despite the various predictions of imminent collapse, will be quite pleased with what's happened this past week. Though we have mentioned that we ourselves broadly are out of equities, as we suspect we are not that far from the inevitable fallback. We won't use the word crash at this stage. Brent crude closed at $76.18. That's up $2.67. And WTI crude closed at $74.05. That's up $2.41. And we can see oil prices creeping further up. As we've mentioned previously, that OPEC Plus are secretly trying to get the oil price up well into the 80s, and some forecasters are predicting as high as $100, which frankly is a scandal, bearing in mind that we all know there is plenty of supply of oil, and with more and more environmental considerations being taken into account, there should actually be a decline in the demand for it. So it just goes to show, people talk about gold and silver manipulation. There is no greater manipulation than in the oil price, and they have the audacity to reveal it through OPEC and now OPEC Plus. The dollar index stands at 91.85. That's down 0.37 on the week. But we have to bear in mind it rose considerably, well over 1.5 points last week. Now, we concluded last week's video with the following forecast. Quote, our gold trading range for this coming week obviously changes to take account of recent events. We foresee regular trading for gold between 1700 and 1800, with 1650 to 1850 as outliers, and silver trading between 25 and 2650, with 24 to 2750 as outliers. Well, we can see gold traded just $30 between its high and low, between 1795 and 1765, so well within our 1700 to 1800 range, ending the week broadly midway and tightly within our trading range. Silver traded just 73 cents between its high and low of 26.31 to 25.58, and again well within our trading range of 25 and 26.50. Thankfully, for those who want to see higher silver prices, closing above the $26 level, as it did look at one stage as if it would struggle to do so, and had it not exceeded that figure, would not portend to a very healthy move on Monday, though we're still going to suggest it may not be that healthy nevertheless. Looking firstly at gold, we can see that $1,800 is representing some considerable resistance and is frankly quite close to where the 50-week EMA rests, as well as being a psychologically important round number. We have to bear in mind that these round numbers do ironically play a part, particularly in the paper markets, which tend to dictate price, quite frankly, certainly short term, as after all, traders are human like everyone else, being motivated by both greed and fear. And round numbers do have quite a significant impact on one's assessments. If gold continues to struggle, then we can see it head down towards the 1700 level, literally through exhaustion rather than because of any specific event. Chartists will raise the issue, and will no doubt see this being published, of the 20-week EMA, which rests around $1,600, which is where they tend to believe that ultimate support rests. Having said that, of course, the inflation or PCE figures announced yesterday showed an increase in May of 0.4%, thereby providing an annual rate of 3.9%. This is almost double the 2% inflation target the Fed has set, and therefore this is going to create a degree of fear. On the one hand, because of potentially speedy tapering and rising rates, or alternatively, some positivism, because if inflation's rising and the general view is that the Fed is not going to raise rates to combat it, then that could potentially prove good for gold. Now, the Fed has reported that this hike of inflation is transitory, and frankly, until next month and possibly even the month after, we won't know for sure whether that is the case or not. In any case, though, the advent of higher inflation and the various Fed governors speaking this past week, suggesting that they are broadly calm about it, did help gold rise, ending the week on its first weekly rise for a month. However, we are seeing significant funds moving back into the equity market, and this is often, not always, but often, to the detriment of gold and silver. So, we have support at 1762 and 1731 before it reaches that 1700 level. And we can see resistance at the 100-day moving average of 1793, and then, of course, as already mentioned, the 1800 level. The 10-day moving average has fallen below the 100-day, and what that tends to signify is that a short-term downtrend is in place. The MACD index and histogram suggest further consolidation at these current levels. Looking at silver from a technical perspective, analysts are calling out a bear flag pattern, which generally suggests further downward movement, at least in the short term. This is confirmed with the 10-day moving average crossing the 100-day, and the MACD histogram suggesting consolidation. Now, all week we mentioned that the important economic data was being published on Friday, and frankly the figures were a little disappointing. Personal income was 2% for May, and consumer spending was flat. Core PCE index suggests an annual rate close to 4%, as already mentioned, though Thursday's jobless claims did move in the right direction. Flash manufacturing PMIs were up, though services were lower in June compared with May, but we shall wait until the final figures are published before making a judgment on this. Biden has also broadly agreed a $1.2 trillion infrastructure package with one caveat, still to be ironed out, and all of this combined has resulted in a rather buoyant equity market and gold and silver prices to some degree broadly being neglected. Looking at next week's economic news, on Monday we have the New York Fed President John Williams speaking at the BIS panel, but no other economic data being published of any significance in the US. On Tuesday we have the S&P CoreLogic Case-Shiller Home Price Index for year over year for April. Richmond Fed President Tom Barkin being interviewed, but the important one for that day is the Consumer Confidence Index for June. Now, we have the spate of employment reports this week, and on Wednesday we have the ADP employment report for June. We also have the Chicago PMI and the pending home sales index for May. Thursday, of course, the regular weekly initial jobless claims report. But we now then have the market manufacturing PMI, the final, and the ISM manufacturing index for June. We are expecting these to be higher. We have construction spending for May and motor vehicle sales for June. And then the all-important non-farm payrolls, unemployment rate, average hourly earnings, all for June. And then we have the trade deficit figures plus factory orders for May. So the key thing the markets will be looking at this week, they'll take a look at this consumer confidence index. But more importantly, they'll follow the ADP employment report, compare that also with the initial jobless claims, and these two combined should give us, it's not guaranteed, but should give us a guide as to the all-important non-farm payrolls. And we have to remember last month, for May, the report was 559,000 jobs. And we'll no doubt talk about expectations for these figures during the course of the videos we produce this coming week. So very important week, but as is often the case, most emphasis towards the end of the week rather than the beginning. So, the technicals are suggesting gold and silver price consolidation and potentially lower prices, though we all know that much now depends on the US dollar and the potential forecast for QE tapering. As already just mentioned, the end of the week is likely to be more decisive than the beginning because of the nature of the economic news to be announced, particularly the non-farm payrolls. So, our gold trading range for this coming week, we foresee regular trading for gold still broadly between $1,700 and $1,825, with $1,650 to $1,850 as outliers, though you could stretch the lower end to $1,630, but we're going to hold fast at $1,650. And silver trading between $25 and $26.50, with $24 and $27.50 as outliers, though we're not really expecting either of those two ends to be reached. What do you think? Do share your thoughts. Thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And as always, we wish you a safe, enjoyable weekend and most prosperous week ahead. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.